Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Scott Nations, President of Nations Indexes. He joins me to discuss why the broad market, it's still dependent on what the frothiest names are doing, and they need to continue to do well. Scott, it's great to see you as always. Welcome back to Trade Talks. And it's interesting, in 2023, it seemed like the market was so fixated on how many rate cuts we were going to get. And this year, it seems as if that's almost an afterthought, and it's just all about these AI names.
Absolutely. And those are the frothiest names going on right now. We came into the year thinking that the Fed was going to cut maybe 5 or 6 times, and now looks like we'd be lucky to get half of that number, or at least the market would be happy to get half of that number. But the frothiest names, everything that has to do with AI, is through the roof. Even Tesla, which is tangentially connected to AI, is the biggest gainer in the S&P 500 today. Although it's still a bunch off its high. It's 40% off its 52-week high, so I wouldn't get too excited. So a few names are doing really, really, really well, but breadth is horrible. The S&P cap-weighted index, so the brand name S&P index, is up for the year about double what the equal weight index is. The Russell 2000, which has very little to do with AI, is actually lower on the day. And so we're really focused on not just the Magnificent Seven, but anything that has to do with AI.
Yeah. I mean, the Russell 2000 I can get, right? The interest rate is higher for longer. We see what's happening with yields, and we know how sensitive those types of stocks are when it comes to cost of capital and higher interest rates and so forth. But is it better that the market is focusing on the fundamentals of what's happening with AI versus being so reliant on what the Fed does, or the fact that it's just that concentration risk, regardless of what happens with the fundamentals, you need a little bit more participation besides, those 6, 7 handful of names?
Well, and you mentioned interest rates, and that's probably what I should have led with. 10-year yield back above 4.3% right now, so at its highest level since November of last year. And you mentioned fundamentals. The problem is that I don't believe the stock market is even remotely focused on fundamentals. It's higher today, even though interest rates are higher and near their highest level in 5 months. We're not focused on interest rates. We don't care that the Fed's not going to cut. In fact, the opposite of focused on fundamentals is focused on the frothiest, most bubblicious names. That's what's going on right now. And it's really dangerous. But for people who are worried, and I can understand how you would be worried, there are ways that you can protect yourself. Taildex, ticker TDEX, is back below 10. That's the cost of 30-day crash protection in the S&P. And so if you're worried, and I understand why you might be worried, because then you have an opportunity to protect yourself using options.
Yeah, I mean, you certainly do, because there are some names where you want to be cognizant of portfolio management and, staying within your risk parameters, whether it's 10% to the downside, 10 or 20% to the upside. And these stocks have certainly made those moves, certainly, on the upside, but they still continue to move. So you want to be able to hold them and be able to participate in those gains. But it's got to be a little bit hard to sleep at night when, even if they do get that pullback, and we did see this happen, that there's just money right behind it to get in at better levels. So it's almost like you're playing a game of chess while you're still trying to hold these within a portfolio.
And people who have been long names like NVIDIA for the past year or year and a half, they're looking at their statements and they're saying, boy, I'm doing great. I must be a great investor. I must be smarter than the average bear, if you will. And I say, congratulations. NVIDIA is a great company that's done really, really, really well. But, it's the same sort of thing that people were saying about Tesla a couple of years ago. And again, Tesla, 53% from its 52-week high, and it just dropped out of the 10 largest names in the S&P. It's no longer among the 10 biggest names in the S&P. So when these things unwind, they unwind pretty quickly.
Yeah, they certainly do, Scott. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.